Let's say I'm showing you this premium table. Two people, same age, same 1 crore term cover, but one is paying 13,000 per year and the other 21,000 rupees per year. And your immediate reaction is probably, what's going on here? Why are they paying different premiums? Well, that's exactly what we're going to talk about in this video. Hello folks, I'm Shashank and welcome to the episode 4 of Term Insurance 101, where we simplify term insurance without jargon. In this episode, we're going to talk about that one thing everyone Googles before buying a plan: premiums, or how much will my cover cost? Why do they vary so much? What makes one person pay more than another? And how you can keep your premiums low without compromising on coverage. We'll break all this down, and by the end of this episode, you'll exactly know how insurers calculate your premium and how you can take control of it. And if you want help figuring this out for yourself, just book a free call with Ditto. We'll compare premiums across insurers, explain any extra charges, and help you understand what's fair. The link is in the description. Alright, back to this premium table that I was talking about. Let's break down what actually goes into that number. First, the basics. Your premium is essentially the price you pay to transfer risk to the insurer. You're basically saying, if something happens to me, I want you to give my family 1 crore rupees. And the insurer is calculating, how much do I charge to take on that risk? And for that, they look at 5 big things. First, age. This one's easy. The older you are, the higher the premium is. Because the older you get, the higher your mortality risk is. But here's the part most people miss. The increase isn't linear. A 45-year-old doesn't just pay double what a 25-year-old pays. They might pay 3x. I'll break it down with an example. Let's say a 25-year-old pays 14,000 a year till age 70. Total premium outgo is 6.3 lakh rupees. Now take a 45-year-old, same cover, same term, and he pays 38,000 rupees per year, but only for 25 years, totaling to 9.5 lakh rupees. Shorter term, higher cost, which is why we always say the best time to buy term insurance is today, not tomorrow. Definitely not when I'm older. Second, your health. If you've got conditions like diabetes, high BP, asthma, or even borderline cholesterol, that affects your risk profile. Insurers will either load your premium, meaning increase it, or in some cases ask for extra medical tests before accepting the proposal. And yes, if it's something very serious like heart diseases or cancer, they may decline the application altogether. Also, they look at your BMI or body mass index, blood sugar, cholesterol, even your family history. Say, if your dad had a heart attack at 42, that's something insurers will factor in even if you're currently healthy. This is why buying early makes so much more sense. At 25 or 30, you're more likely to pass medicals smoothly and lock in your premiums for the next 30-40 years. Third, your lifestyle. Smoking? Well, that's a big red flag. Tobacco users, even though if it's chewing tobacco or gutka, pay 70 to 100% more than non-users. Even vapes or nicotine patches get flagged unless you've totally been nicotine-free for 1 to 3 years. Alcohol, casual social drinking isn't usually a problem, but if there's evidence of heavy or regular consumption, insurers may ask for liver function tests or increase your premium. Then comes your job. Yes, your occupation affects your premium too. If you're a software engineer or a teacher, it's low risk. But if you're a pilot, oil rig worker, or part of the armed forces, that's considered high risk. Some insurers may even have coverage limits or exclusions for certain duties. Even hobbies matter. If you like scuba diving, mountaineering, motorsports, or paragliding, if you're doing these regularly, the insurer may load your premium or ask you to sign a specific waiver. What's the bottom line here? The insurer wants to know how likely is that they'll have to pay out your sum assured during the policy term. Now let's talk about sum assured and term, the two things you actually choose. You see, the higher the cover, higher the premium, obviously, but it's not always proportional. A 2 crore cover might cost only 1.5x what a 1 crore cover costs, not double. And why is that? Because it's called tiered pricing. Insurers offer better value per lakh when you go for a higher cover under the same policy. Same with the policy term. If you're getting covered till age 85 or 99, that's great, but it comes at a price because the chances of dying by that age are, well, 100%. That's why premiums for ultra long term policies are much higher. At Ditto, we usually recommend choosing a policy term that covers your financially active years until your kids are independent or your major loans are paid off, not necessarily till the end of your life. Then there's how you choose to pay. Now, before we get into that, let me remind you that if all of this gets confusing, then book a free call with Ditto. It's completely free. The link is in the description. Now, you can go for regular pay where you pay premiums throughout the policy term, or limited pay where you pay for say 10 years or 15 years and then stop, but your cover continues. Limited pay plans have higher annual premiums but lower overall outgo. They're great if you want to wrap up payments early, especially if you expect irregular income later. Also, the frequency matters. Monthly or quarterly premiums are more convenient, sure, but slightly more expensive because insurers lose out on investment income when the money comes in smaller chunks. If you can afford it, annual payments are way cheaper in the longer run. Now, what happens if you miss a payment? Well, here at Ditto, we have encountered cases where people have missed their payments, but they're usually covered by something called as grace period, usually 30 days. If you miss that too, then the policy lapses. But you can revive it usually within 5 years by paying the dues and possibly doing a fresh medical test. Still, best not to cut it that close. If you've paid for years and then forgot a payment, you risk losing everything. So don't forget. Maybe set a reminder. Alright, quick recap. Your premium is not random, it's built on a couple of factors. Your age, your health, your lifestyle, your job, your coverage amount and term. How you choose to pay, all that goes into a single number. And that's why two people of the same age can still pay vastly different premiums. So if you're trying to find the best quote for your profile, don't rely on guesswork. Book a call with Ditto. We'll run the numbers for you, explain the charges and help you get the best value without overpaying or getting undercovered. And in the next episode, we'll finally answer the big question. How much term insurance should you take? 1 crore, 2 crore or more? There's actually a very logical way to calculate this and we'll show you how. I'll see you in that episode. And folks, if you found this video helpful, please like and subscribe. Our effort is to educate you about insurance free of cost. And I will see you in the next one. Until then, happy insurance hunting.